Hi, Michael here, March 2, welcome back. We're 5 p.m., just over 5 p.m. European time, which means that the US markets have been open for an hour and a half. And the question of today is the top one share in the sweet spot has a spread of 37.87%. Should I buy? The question explicitly is not should you buy, because you're aware that I don't know what I'm doing, so I'm not giving investment advice. I'm just sharing what I do or don't do or would do or would not do. Before we're going to discover what that share is with this a very nice spread, let's have a not daily market update. It's not that nothing's happening on the markets, but it has very little direction. We'll see that there's, despite that, some quite some nice movers left and right, but it's all very specific for certain shares, and there's not a broad trend to be seen there. Obviously, everybody is still waiting for all the inflation numbers now coming out in Europe. And there's of course the underlying fear that with increase in interest rates, we may fall into a recession still. It's a ghost that every now and then puts its head up. Looking at the dashboard, I've told you earlier, it's not that because there's not a clear direction and not much news that nothing's happening. If we look at open text, a nice increase of 36% today. So congratulations to everybody who has that in portfolio. And nice increases in other shares as well. As you can see, I'm completely up to date with the file now. No records older than 1 day, and obviously this is all mentioned March 1 because we're working. We've been updating the file earlier today with data from yesterday. Some movements in the sweet spot as well. Yesterday we had 3 shares in the sweet spot, and today there are 8 of them, of which you can see the top 6 here, starting with Target Corporation with a nice spread of 11.5% up to the one that we will be talking about today, Adapt Health with a spread of 38.69%. Now, as a reminder, what is the sweet spot? The sweet spot are those shares with a rating of accumulate or buy, so they're in here, and with a difference between the current price and the first resistance of at least 10%. That's the sweet spot. So would be a no-brainer. I can hear you say this is the one that we need to buy because you'll make 38.69% profit over time. Is that true or is that not true? Well, obviously it depends whether we will make this 38.69%. Depends a bit on how much time we would need for that. Obviously, the more time you need for that, the more risk there is that an internal or an external event happens which influences this share price. That is one thing. The second thing is actually the why question. Why does this share have this spread of 38.69%? There could be 2 reasons. One, because the share is very cheap, or 2, because the share is not very cheap. Let me explain. If this share has recently broken a resistance and has very strong positive indicators, then I would not expect, to be honest, an additional spread of 38.69%. And as you can see, it's going up and down here as we speak. It's now 38.51. But if it has just recently broken a resistance and all the indicators are positive, then you could expect some fairly some nice increases in a fairly short term. Um, that is not the case for Adapt Health. I've had, as I do for all the shares in the sweet spot, those are the ones that I really look at in detail. What is actually happening with Adapt Health is that it's close to a bottom, and that's why it's so cheap. Um, but that's why why it's got such a nice spread. It's because it's so cheap. It's uh, it's reaching an all-time low, and there again you need to ask the question, why is that? Has the company been performing bad? Has something happened recently? Um, I don't know. What I do know is that it has a rating of accumulate, which means that there are in, no intrinsic issues with the company as is. So it could either be a product that has failed, or an approval of, because we're talking here about, I guess, some medicine company, an approval of the authorities that is still pending, um, or what have you not. In either case, fundamentally, the company looks to be in good health, and there are as far as we know, no dead corpses in the cabinet. But what we do see is that the indicators for the short, mid, and long term are not negative but neutral. So what that means is that even if nothing else happens that could influence this company or the share price, you're in for a very, very long ride until you're going to make some profits here. Um, the question is academic for me because I don't have budget to buy. There are two shares that are close, and I've been saying that for over a week, close to the limit where I'm willing to sell. And I need to sell at least one of those two packages before I can look into something else. And the two that I am looking into with increased interest and with large detail are Lazy Boy and Cosmos Energy. So I hope one of these days I can indeed announce a buy transaction for one of these two, or maybe by that time another share that has entered the sweet spot. Let's just for the record have a look which the other ones are. The first six you've already seen, and then we have Microchip here, Apellis Pharmaceuticals as the additional two that are in the sweet spot. So having said that, it's not because this very nice spread is here that's an indication to buy. You need to study in detail every share at its merits, and then draw conclusions which fit the personal situation of the investor. I hope this was of interest for you. We're going to leave it at that for today. So the answer is, should I buy? Well, the answer is to the question. The answer to that question is no. I should not buy. And what I might buy, we'll see that over the next couple of days. Thank you again for joining today, and we will be back tomorrow.